All right, welcome back. It's time for the Market Navigator. Although some crypto stocks are pulling back today, they have been on an absolute tear in recent months, with Bitcoin hitting a record high on Monday. Now, if you've been on the fence, our next guest says now is the time to jump in to the crypto game, and he's here to tell us how to play it, either directly or indirectly. Joining us now is Bob Lang. He's the founder and chief options analyst at Explosive Options. Bob, the Bitcoin trend has caught a lot of attention because of those record highs, but would you be using Bitcoin itself to take that view of higher crypto or some other trade?
Great to see you again, Dom. So I really like Coinbase right here, Dom, and I think that Bitcoin's got a really good chance to run much higher into the end of the year. There's been a lot of enthusiasm, a lot of bullish sentiment coming into Bitcoin, and the best vehicle to use to take advantage of Bitcoin, if other than ETFs, is probably Coinbase. And, you know, Coinbase has come off of a recent high and it's pulled back a little bit. I think this is a good opportunity to buy the dip.
All right, so if you're going to buy the dip with Coinbase, it's easy enough to mechanically just go and buy shares of Coinbase. You often look at some option strategies because they are more, at least, risk manageable around some of your kind of profit and loss expectations. What exactly would you do strategy-wise to express that view in Coinbase?
Well, I want to go with a straight call play here, Dom. And normally I might take a look at spreading the trade, but in this particular case, I'm looking to go out to about December. The 430 call, which is about $50 above the current price of Coinbase. This is about 8 to 9% of the price of the stock. Now, why am I going out to December? I'm looking out to December because this includes an earnings period as well, too, at the end of October. With earnings move is expected to be about $68 to $70 for Coinbase. And if that stock moves at least that much to the upside, we're going to go through those old highs, and this option trade is going to be pretty profitable. That option, the 430 call, is trading at about $31 to $31 right now. It's about a 40 delta, which means it's about a 40% chance of the stock getting to that strike and maybe above it by the December expiration. So giving us about 2.5 months time to let it work. We're not in such a big rush, and of course we have that earnings play to work through it too.
All right, so if the earnings is a potential catalyst, even the fundamentals of cryptocurrencies and their trading a catalyst as well, are you comfortable just letting this ride all the way through that, or would you risk manage it between now and the end of the year?
Well, I'm always looking to manage risk, as you know, Dom. So, yes, I would probably manage the risk if the stock gets a good pop after earnings, or maybe possibly a good pop if Bitcoin takes off. You know, don't forget, last couple of months, Bitcoin's been on a roll and went up from about 112,000 up to about 125 to new all-time highs. Coinbase rode right along with it. So I think that managing that risk is really paramount. If we get up to about 40-50% gain on that thing, I'm going to sell some upside calls against the call, or possibly just roll it up and keep running. Momentum in this stock is extremely strong when stock is going up and bullish to the upside, and this calls can really move.
All right.